Hello, chart watchers, and welcome to this Tuesday, January 23rd, Market Watchers Live show with your hosts, Tom Bowley and Aaron Swinlin. For those of you joining us for the first time today, welcome to the show. We got a great show lined up. And of course, for our regulars, welcome back. Let's take a look at some of the happenings. Pretty crazy action today on Wall Street. You can see, first of all, the Dow Jones just a little bit below the flat line. The S&P 500 up 4 points. The NASDAQ having a really nice day on the heels of a strong Netflix subscriber report, up 39 points today. The Russell 2000, after an early swoon, you can see has rallied back and moved into positive territory. 10-year Treasury yield taking a little bit of a pause after reaching 2.67% on the close yesterday. With that move down in interest rates, utilities getting a little bit of a break. They hit key price support and bouncing as we might expect. Also having good days, you can see technology and the consumer discretionary space both rising today. Internet stocks broke out yesterday. They continue to move higher today, and that is certainly helping the technology area. Interactive Corp IAC, one of the stocks benefiting, moving higher, as you can see. Netflix, as I mentioned earlier, this is helping the consumer discretionary sector, but Netflix came in pretty much matched estimates in terms of top and bottom line. No major beat, but they did come in with subscriber numbers that just blew Wall Street estimates out. And as a result, stock up, you can see there $23.50 today. And JP Morgan, flat today, but coming out with a huge investment initiative, which we'll talk about in just a couple minutes. But first, let me bring in my co-host, Aaron. How are you doing today? You may be on mute.
I'm doing fine this morning. I'm going to find that mute button and punch it more or less.
Yeah, it's been, it actually warmed up tremendously here on the East Coast. So I went out this morning at 7 o'clock or a little before 7, it's 62 degrees.
Wow.
The morning here is pretty impressive. But how are things out on the West Coast?
Oh, beautiful as always. I mean, blue skies. We need rain. We need rain, guys. Send the rain our way. We've had one rain since the fires, but it's been enough to add a little grass on the hills, so that's kind of a positive.
Yeah, see, you got the weather that's kind of like, I don't know, the Dow Jones. Dow Jones keeps going up every day. It's kind of boring. Your weather's
exactly.
See, my weather here is like the renewable energy space. It's like all over the place, and we're going to talk about renewable. But that group has been literally all over today with some tariffs that were announced by President Trump on solar panel imports. So that group has just been all over the place. Pretty interesting, but we'll get into all that in just a minute. I'll let you first go through the announcements and give everybody the agenda for today.
Absolutely. So upcoming tomorrow, we have Scott Carney, the harmonic trader. I'm really interested in hearing about the type of analysis he does. I'm not that familiar with it, so I think everybody will get some great information out of that. And Friday, Tom's doing a workshop on trading with the PPO and moving averages. So that should be very interesting. For today's agenda, we've got a packed agenda as always. Grayson Rose is here from StockCharts to go over everything StockCharts. We also are going to be doing a sector rotation segment, let you know where the money seems to be rotating currently. And 10 and 10 to 1, our very first symbol will be Realty Income Corp. O is the symbol if you want to go take a peek at that before we get to 10 and 10. And then finally, we have agree or disagree. And Tom and I have not revealed what we're thinking as far as the question or the statement. So it'll be, I'm curious what you're thinking on that one, but we won't divulge the statement just yet. So with that, I'm going to pass it back over to you for some technical news. What is going on out there in particular?
Well, I tell you, it's been crazy. I'm not even sure where to start. Not a whole lot of economic news, but earnings news is really picking up. But the economic news pretty slight, so not a whole lot there. And you can see the 10-year Treasury yield actually pulling back. But we have had a straight-up move, closing at 2.67% yesterday. So there's been a lot of selling in bonds, and that money has been rotating and finding its way in equities, which has certainly been helping all of the major indices. We could first pull up the Dow Jones, kind of take a look at a longer-term view here. But you can see it's just been this steady march up, especially since the beginning of September. And if we go back and we take a look at that 10-year Treasury yield, that is about the time the 10-year Treasury yield started moving a lot higher. So there is a very strong correlation between the direction of the 10-year Treasury yield and direction of equities. And we have certainly seen that play out over the past 5 months or so. Let's see. Where do we want to start today? Well, I guess with the 10-year Treasury yield being lower, we got to give a little bit of love to the utilities group, which has just been absolutely beaten up with these rising rates. You can see the utilities have been falling for about the last 2 months, almost nonstop. Very, very little in the way of a reprieve. But we are getting a nice move today. You can see the utilities up 1.22%. And I think the key is if we go back and we look at a weekly chart, you're going to see that there's actually some pretty good price support that comes in right at about the 50 area. You can see the top in mid-2016 and then a lot of hesitation at that 50 area in the really first and second quarters of 2017 before we finally made the breakout. We've been back down. We tested the area, and we're back down there testing it again. I really don't like the overall view here, but I will say that a bull market tends to take everything with it to the upside, or just about everything. So I suspect the utilities will flatten out and start to move higher. It's just as long as we're in this environment of rising Treasury yields, the XLU should not be expected to lead to the upside. I think we're going to continue to see that group be a laggard. So the XLU certainly taking it on the chin over the past few weeks, couple months, but getting some relief today. So I guess that's a good thing. XLK, this is the technology area. You can see it's been a steady move up in 2018, not even getting a rising 20-day test. And the group continues to perform well today, up 0.41%. The XLY, consumer discretionary, also doing very well. You can see just a continuing move to the upside. Very few down days in consumer discretionary. And I think the news that came out earlier today from JP Morgan Chase really epitomizes, I think, what traders are looking at in terms of consumer discretionary in 2018. But JP Morgan came out this morning and announced a $20 billion investment initiative, which includes raising wages on average 10% for their 22,000 workers. They cited the tax bill, all the tax changes, as one of the reasons for this initiative. It's over a 5-year period. And in addition to raising wages, they also plan to hire another 4,000 new employees and build another 400 branches. So when you consider what they're doing as a result of, and I'm sure it's not just the tax plan, but I think the overhaul of the tax plan certainly had a lot to do with it. They specifically mentioned it. And so all of a sudden now you've got employees with more income, you've got new employees being hired, and the construction of more branches. And if you think about consumer discretionary, all of a sudden this is a group of people going to have a lot more discretionary income. And so I think it's just been building. I think this is what the market's been telling us, is that the economy is strengthening. It's expected to continue to strengthen. And we're seeing a rally in the areas that you would expect to see rallies in that kind of an environment. So JP Morgan, though, that was a really tremendous announcement. The stock itself not doing a whole lot, but keep in mind that this is a bank. It's not a semiconductor company, that goes from losses to huge, windfall and profits in a year. It's not that kind of an industry group, but it has been doing extremely well, as have most of the banks. So JPM with that announcement, I think that was pretty big news. The renewable energy space is one that's just really gone a little crazy here today. You can see the huge move up in the renewable energy earlier today, but it has come back down, and it's down near the low of the day right now. Big reversal. We were up over 110.58. Now we're at 102. So from the high, we're down close to 8%, maybe 7.5%. This has been a big move back to the downside. And pulling up an intraday chart, I think really shows you what was going on. So President Trump announced that there would be tariffs on solar panel imports. And a number of U.S. companies have said that the imports coming in from Chinese have been much cheaper and have effectively been putting them out of business. So this was partly in response to that. And so it looked like everything was great this morning. A lot of the U.S. Solar panel companies, a lot of the renewable energy companies soared right out of the gate. And then there was some talk about maybe retaliation from other parts of the world for this imposed tariff. And so I don't know where everything's going to settle down, but you can see this was a huge move to the upside early. It's come all the way back down. It's now down from where it closed yesterday. And where it finishes today is anybody's guess, but it is an extremely volatile part of the market today. I mentioned the consumer discretionary earlier, so let's take a look at the Dow Jones Specialty Retailers Index. Look at the huge move up. The reason? Netflix. Netflix reported earnings last night. The market loved their subscriber numbers. So if we pull up the Netflix chart, you can see the huge gap up. The stock is up almost 10% today after its earnings report. It does have a black candle so far, and we do see very incredibly heavy volume today. Looking back over the last 6 months, we are already almost to the highest volume level of any day over the last 6 months, and we're not even to the halfway point of the day. So there's a lot of interest in Netflix today, and the Internet Index is the primary reason we're seeing strength in technology. Another move today higher. The Internet Index up about 0.75%. This comes just a day after a huge rally to break out to all-time highs. Some of the names in this space, Snap actually moving up pretty nicely, and you can see the downtrend that it was in, but it has moved all the way back up. It's filling a gap from about a week and a half ago near the 1470 area, 1460. If we can break up back above that, I think that would be very bullish. Another stock in this space, Interactive Corp, IAC, sideways consolidation for a couple of months, just recently making a breakout, volume starting to pick up. I think IAC looks very interesting. And then Facebook. Of course, Facebook took a hit about a week and a half ago, and I think they were announcing something going on with their news feed and so forth. A lot of folks didn't like it. We got the gap down, but we have moved all the way back up. We've now filled that gap, and so Facebook is at an interesting level where you might see some profit taking. Let's get into some of the earnings reports. J&J, they actually missed on the top line, barely. They just came up a little short. $20.20 billion was the actual. Market was expecting $20.22 billion. So very slight miss on the top line. Bottom line, there was a beat, 174 versus 172. We have seen a pullback here. I would expect that you're going to see some support. You can see this double top that came across here right at about the 144, 143, 144 area. So this pullback now is roughly 3.25%. We're back into the 143s. I would be looking maybe for a move back to the upside by maybe later this afternoon. If we don't hold on to 143, I think we could go back down and see this low that was established at the beginning of the year, which is down around 139. But J&J, I thought the report was pretty solid, although there's a lot of perfection that's built into these numbers, and coming up even slightly to the downside on their on their revenues can be construed as a problem. And apparently traders didn't like it today. Procter & Gamble, this is a consumer staple company. They actually beat top line, beat bottom line. Revenues $17.4 billion, market expecting $17.34, 119 versus 115 on the bottom line. But stock selling off, got pretty good support down here just below 89, and we're just about at that level now, actually at 88.94. So this will be a key area of support on Procter & Gamble. It looks to me like off of an uptrend, left shoulder, neckline, inverse head, right side of the neckline, right shoulder, couldn't get the breakout. Now we're testing that shoulder again. So this is a pretty key area to watch on this. Travelers, I did want to mention this one. They came out with a really nice report, and you can see great move to the upside. And instead of all of the anticipation that we've seen in a lot of these other stocks, Travelers really went sideways for a few months prior to making a little bit of an earnings run before this announcement. But they beat on top line $7.38 billion versus $7.1 billion. And their earnings per share just blew it right out of the water, $2.28 versus $1.64. And as a result, you can see Travelers, the best performer in the Dow today, by the way, up 4.45% currently. Let's take a look at a couple of the upgrades, and then I'll turn it over to Erin, and she'll give you some of the downgrades today. Actually, this is not an upgrade. Texas Instruments reports tonight after the close, so I did want to mention that one as well. That'll be a big report coming out of that semiconductor space. So upgrades, ATUS. This is at our Altice. I actually am interested in this stock. I don't own it, but it's been moving down, and it looked like really nice volume on this gap up here. This is, to me, maybe some type of a breakaway gap off of the downtrend. Went back, we filled the gap. Yesterday, printed a bullish engulfing candle, and then this morning we get an upgrade. So if this stock can get back up, close above 24, I would find that very bullish. Next up is Dick's Sporting Goods, DKS. And after a huge rally, we've seen a lot of these retailers and so forth moving higher. It's been a beautiful rally off the lows back in early November, but it maybe is a buy on rumor, sell on news kind of a thing with this upgrade. Gapped up earlier, has pulled back. I think the chart still looks good. Keep an eye on that rising 20-day moving average. Next up, GGG. This is Graco. Came out with an upgrade. You can see already in a nice uptrend. Another push to the upside. It's just a little overbought, but otherwise looks good. And PANW, after reporting solid earnings recently, got a nice gap up, came all the way back down and tested this rising 20-day moving average, and now it's bouncing again with this upgrade. I think PANW looks interesting, especially off of that hammer that printed on the 20-day moving average. So with that, I'm going to turn it over to Erin. What downgrades do we have today, Erin?
All right. So the downgrades, let me go ahead and share my screen. We have 5 of them today. Let me get to where I need to be. All right. So here are the 5. I'm going to just go through them really quickly. So these were downgrades, and a lot of times we like to find some opportunities off the downgrades because they pull back, and then there's sometimes opportunity there. So I'll be looking at it kind of with that eye. At this point, we got the downgrade on Arista Networks, a net, and it is pulling back. It's down, a little less than 0.5% right now. With the downgrade, you would have expected maybe a little bit more of a pullback, but it looks like ANET's not having any issues. I'd say if I were I'd hold this. If I had it, it probably is a little late to get in, at least for my trading strategy, because we do have that buy signal that happened. But you can see very strong scooter. You can see the very nice move on the volume, the OBV. Really, really a pretty nice chart. But like I said, I think it's a little late to get in, but still looking pretty good as a hold. Now, this one I thought was very interesting, FTNT, Fortinet. And again, here's that downgrade where you get the big drop to test important support. And at this point, it's trading at the top of the intraday range, but it did go down and test this area of support. So I think there is some opportunity on this one. We got a failed breakout, but we'll have to see if a retest will get that the breakout from there. I am a little bit nervous about this PMO turning down, but as you can see, I mean, with a drop that we saw today, it's not a big surprise. GoPro. It's been a difficult ride. Really clear head and shoulders here, right? This is like textbook. And if I drew in the neckline, once we got the penetration of that neckline, the height of the pattern is the expected, that's how you calculate your minimum downside target. And you can see we've already passed through that level. So this is an area where we should find some support. The PMO is decelerating, looks like it wants to turn up. But I always get kind of nervous about these with that whole catching a falling knife sort of thing. And you can see on a weekly chart for GoPro, we're testing, the all-time lows for this particular stock. So I would stay away from that.
You'd never know we were in a bull market looking at the GoPro chart.
Exactly, right? And here is the weekly chart for Sprint Corp. And I'll show you the daily chart, but the main thing you want to know is on the weekly chart, we have come down and we're now breaking below very important support here. And if that is broken, we could see a long move down for Sprint. So again, not one that I would be looking for as an entry, and even the PMO, at least on the weekly chart, not looking too good. But I'll take you to a daily chart here just so we can see it. And again, the reason I went to that weekly chart is because we're on lows that we haven't seen for a year. Look at that PMO sell signal below the 0 line. This is that falling knife I wouldn't be trying to catch, that's for sure. And finally, nope, I think I have one more. Wayfair. All right. And this one looks similar to ANET that we already had. It's already on a nice move. You can see that I didn't draw it in here, but a rising bottoms trend line, it's still holding on to that. So even though we got this big pullback from yesterday's close, I think there's still some opportunity here. And that's the kind of pullback you want to see before getting in. And you can see we're looking at a nice PMO. There's bullish confirmation on those PMO bottoms rising with the price bottoms. And again, OBV is moving up with price, and I like to see that. And of course, we have a scooter. It's in the hot zone right now. So I think this one of all of them looked probably the best as far as opportunity.
Yeah, and sometimes you do get that opportunity when you get these downgrades. You get stocks that have been rising. And if you can read, if you can find a story about it and find out the reason, a lot of times these stocks that have been up so much, they get downgraded because of valuation. It's not because that the company's not excelling or performing well. Sometimes the stock just goes up so much that the analyst comes out and says, hey, we just think it's due for a pullback kind of a thing.
Exactly.
So that is it for some of the upgrades and downgrades. And now it's time to move on to everything stock charts. And this week we have Grayson Rose. How are you doing this morning, Grayson?
I am good, Tom. How are you?
I tell you what, I don't want to make any waves out there, but you all had a tsunami or something off the coast.
I know. Wasn't that crazy this morning? I woke up to that news in Alaska. They're having the tsunami. Apparently the warning, I think, speaking of downgrades, it sounds like the warning got downgraded a little bit, but the whole West Coast was on alert. I mean, here in Seattle, where StockCharts is located in Seattle, and we followed that stuff pretty closely. I woke up thinking, oh man, I hope I don't get smacked by a wave today.
Yeah, that's kind of a scary thing. I mean, we have seen tsunamis that have been, crazy. And that was a big earthquake too. I think it was around 8, wasn't it?
Yeah, 7.6 or 8 or something like that. Close to 8. That's scary.
Yeah, that's big even for Southern California.
Even for you, Aaron. So anyways, I am joining you guys today here for the Everything Stock Charts segment. And what we're going to talk about is organizing your chart lists like a StockCharts pro. I'm actually going to share something a little personal here. It's going to be how I organize my own chart lists in my account. So I'm actually going to take you guys over to my account and show you how I've organized everything in there. So I'm kind of opening up here. This is interesting. Yeah. How do you feel about that, Tom?
I'm a little nervous.
Well, first, I do want to sort of do a little more formal introduction of who I am for all of you who are wondering, what's this weird voice that we're hearing on the line? My name is Grayson Rose. As they said, I am the business manager here at StockCharts.com, which is important because that's why I'm joining you for the Everything Stock Charts. But in addition to that, I'm actually an active investor. So I've written a couple books. I've been trading for years, written a couple books. My most recent book was Trading for Dummies. I'm also the co-author of Tensile Trading, the 10 Essential Stages of Stock Market Mastery. That came out about 2 years ago. But my point in sharing that is that what I'm showing you here today, it's how I organize my chart list from the perspective of a StockCharts employee, someone who spends all day, every day on the site working for the company. But it's also how I organize my chart lists from the perspective of an active investor. This is exactly how I watch the markets using chart lists. So I think that's key. So with that out of the way, let's kind of dive in here and start talking about chart lists. First off, this is what we're going to cover today. The first question that we want to get out of the way is, for all of you who are wondering, what the heck is a chart list? We're going to run through that, give you sort of an overview of what a chart list is and why they're important. Because really, I think that chart lists are, without a doubt, the most powerful, most important feature on stock charts. So it's something that we want everyone to be aware of. We're going to actually take a look at the chart list naming convention. We want to make sure that you understand the chart list naming convention and how that affects the order of them as they appear in your StockCharts account. Then we're going to look at how I personally organize my chart lists. Like I said, I'm going to take you over to my account and show you what I do and how I've sort of customized the order of my chart lists for the way that I watch the market. And then most importantly, this is something I'm really excited about. I'm going to share with you sort of my tip of the day on how to create a watch list. By sort of modifying the naming convention of your chart list, you can actually create a very easy to use, quick, really, really helpful sort of watch list on the site that'll make it a lot easier to track stocks as you come across the nice looking charts there that you want to watch. So chart lists, let's dive into it. A lot of you know this. A lot of you, are obviously StockCharts members, you use chart lists. But for those of you who don't know, chart lists allow you to save and organize charts in your StockCharts account. So whether it's, charts you're watching, good charts that you want to keep an eye on, whether it's stuff in your portfolio, this is also annotated charts. So as you're, watching different stocks, different funds, and you annotate those charts, you draw your trend lines, you draw your channels, add your text call outs, all that stuff. Those annotations actually get saved in your chart lists as part of your StockCharts account. You can view chart lists in about 9 different sort of analysis modes is what I call them. Things like gallery view, summary view, candle glance, all of these different modes that allow you to analyze the stocks and funds in your chart lists in different ways. Chart lists can also be made public. We actually have something called the public chart lists area of the site, sort of a way to connect with other StockCharts users. We'll cover that more in detail in a future Everything StockCharts. That's a whole separate thing that kind of stands on its own. But the idea here is that you can actually share charts and chart lists with other StockCharts users. So also a key thing to understand is that the number of chart lists varies by service level. So if you're a basic user, you get 1 chart list. It's just called your default list. If you're an extra user, you get 250 chart lists. And if you're a pro user, you get 350 chart lists. So what I'm going to show you here, like I said, is how I personally organize my chart lists. My account is a pro account, so I've got much more space, which allows me to actually sort of add multiple lists and kind of build out the chart list functionality for the way that I watch the market. So before we do that, the naming convention. This is really, really important. Chart lists are ordered alphabetically. They're ordered alphabetically on your members dashboard, which we'll take a look at in a second. They're also ordered alphabetically in the different drop-down menus on the site. So whether you're on the scanning workbench or the Sharp Charts workbench, any of the different pages, whether you're actually looking at a chart list and you want to switch to another one, the drop-down menus are all going to be ordered alphabetically. However, the order can be modified by using what we sort of call a code. You can sort of add symbols and numbers to the names of your chart lists, and those will actually modify the order because symbols and numbers come before letters in our order of chart lists. So the tip here is that you can use symbols, numbers, or a combination of the two in any sort of customized code naming convention that you come up with, something that makes sense to you, to actually modify the organization and the order of your chart list. So I'm going to show you how I've done that. I'm going to show you here in this presentation first before we actually jump over to the live site, because I think it'll help it kind of make a little more sense what I've done. So my personal organization, I've chosen stars. So I said symbols and numbers. You can use a combination of symbols and numbers. You can just use numbers, just use symbols. I've chosen to use stars. They're kind of small. They don't take up much visual space, but they do allow me to sort of modify the order of my chart lists. I use a 1-star naming convention for what I call my tier 1 watch list. It is the only list in my account that has 1 star by its name. You can see here it's got a star at the front and a star at the back. And it's, like I said, the only list in my account that uses 1 star is my tier 1 watch list. So what that means is that because it's 1 star, it's always going to be at the top of my dashboard, at the top of my drop-down menus. It's always going to be the first chart list in my lists. I'll show you why that's important later on. We're going to get to that tip of the day that I mentioned. Anyways, then I have 5 market analysis lists. These are lists that help me run through what the markets are doing, what the major indices are doing, helps me get a grip on what the market is doing. I have 5 of those, and each of my market analysis lists uses 2 stars. So 2 stars comes after 1 star. So in my order of chart lists, the next 5 lists all use 2 stars, and they're actually numbered. In addition to the 2 stars, they're actually numbered 1 through 5. So I'll show you that in just a second. Next, I use 3 stars for my different portfolios. I've got a couple different portfolios. I actually have sort of nicknames for them, so you'll see that. But for instance, I've got a trading portfolio, and I've got a retirement portfolio. I want to look at those separately because I look at them in very different ways. So I've got chart lists for each one, and each of my portfolio lists is named with 3 stars at the beginning and 3 stars at the back. Now, lastly, I have something called a stocking list. It's 4 stars. And the key with my stocking list, it's the stuff that I'm really watching closely. You know, I'm looking at pulling the trigger on one of these trades. It's sort of been filtered down from my tier 1 watch list into my stocking list. It's a lot smaller, and it's stuff that I'm really, really keeping a close eye on. I'm watching the intraday charts, watching the minute-to-minute movements, and it's stuff that I'm looking at trading pretty soon. So anyways, the key with this star system is that my lists are always the lists that I care about, the lists that I really, really care about, the lists that I look at on a daily basis, on a weekly basis, everything. Those are always ordered according to my star system in the same way. And because I use this star system, they're always right at the top of my chart list order. So in the drop-down menus and on my members dashboard, those are always the first block of chart lists that I see. So I'll show you that in just a sec, actually on the site. I'll take you over to my account. The tip of the day. This is going to make a lot more sense in a minute because we're going to look at the live site. But what I want you to note is that the first chart list, again, the first chart list in the order, whatever it is, if you just, kind of default to the alphabetical order, the first chart list will always appear on the Sharp Charts Workbench Save menu. Whatever the first chart list in your order is, that's always going to appear on the Sharp Charts Workbench Save menu. I'll show you that in a minute. The tip here is that you can create what I call a watch list, which sort of becomes a really quick and easy to use dump bucket for stocks that you come across or funds or anything else. You can create this watch list by using symbols in the name of your first chart list. So by using symbols or numbers to modify the order of your chart lists, if you make sure that your watch list is the first one in the list, then it makes the Sharp Charts Workbench a lot easier to use because you can sort of really quickly, in just one click, I'll show you this, you can dump stocks and funds that you find into that watch list. For me, like you saw, I call it the tier 1 watch list. So as I'm flying around the site, I'm coming across all these different charts. I mean, bull market like we got here today, I'm finding tons of stuff that I like. I just kind of dump things into that tier 1 watch list. And then I go back at a later point in time and I say, okay, I'm gonna look at this more closely. What do I want to add to my stocking list? As I become really serious about something, I'll move it from the tier 1 watch list to the stocking list. So like I said, I'll show you that in just a minute. But this, again, makes it really quick and easy to maintain a watch list of interesting stocks and funds that you find. So let's head on over to StockCharts.com. This is my account, okay? I'm here on the members dashboard. I'm logged into my account. Looks like we've got actually a glitch here. Okay, there you go. So now you can see my account. We're in my account. I'm logged in. This is my personal account. This is what I use every day. So I'm going to come over here to the chart lists button. I'm going to click chart lists, and you should see my chart lists. Okay, I'm here on the members dashboard looking at my chart list. So these lists that I've been rambling on about are right here. Tier 1 watch list, my 2-star market evaluation list, sector ETFs, all that stuff. And then my 3-star portfolio list. You can see I've got Lauriston, Retirement, Stratton portfolios, Voltaire portfolio. That's just sort of my funny nicknames for my different portfolios. And then I've got my 4-star stocking list, okay? So what you can see is that every other chart list in my account is down here, and they're ordered alphabetically. All of these GR lists are actually part of what we call a chart pack. But down below there, I've got some others. These are different chart lists that we actually use to build stuff on StockCharts. But all of my other lists are just ordered alphabetically. But what's important is that the lists that I really, really care about, the lists that I watch on a daily basis, are always up here, okay? So if I dive into my tier 1 watch list and I click on this drop-down menu here, again, in that drop-down menu, the lists that are at the top, because I've customized the order with this star system, the lists that are at the top are the lists that I really want to sort of interact with on a daily basis. Everything else that I use, but it's less common, it's down here, okay? So what we're going to show now, hopefully you've seen that, you've seen me come over to the members dashboard, go down to my chart list, and you can see how I organize my list with this sort of star system. And you can see, my market evaluation lists are also numbered. So I've got the 2 stars, and I've got 1, 2, 3, 4, and 5. for sort of broad market evaluation. I've got specific charts that I look at for the S&P 500 and for something called the VTI, which is Vanguard Total Index. Sector ETFs, Dow industry groups, I'm watching all that stuff. That's sort of part of my market evaluation strategy. So those are all ordered, and they're ordered from top to bottom, right? You've got, total market down into the sector ETFs and then down into the industry groups, Dow industry groups. So anyways, you can see that this is ordered. So this tier 1 watch list, this is the tip of the day. This is what I really want you guys to all watch closely. I'm going to go up here, and let's say I'm flying around the site. I'm looking at different stocks and things like that, and I come across Adobe, okay? And I like the chart of Adobe. Adobe looks great. Hey, up 1.5% today. Chart looks really good. I'm liking that, okay? So let's say I want to keep an eye on Adobe. What I do, because I have this tier 1 watch list and it's got 1 star by the name and it's always the first in my list, you'll notice that any stock or fund that I pull up, let's say I pull up SPY, tier 1 watch list is the first thing in this drop-down menu. By default, your first chart list in your order is always going to load in this drop-down menu. So let's say I go back to Adobe. I like Adobe. I want to add it to my watch list. I want to keep a close eye on Adobe. Maybe I want to trade this in the future. All I have to do to save this to my watch list is hit Save As, Adobe. It's already loaded in here with tier 1 watch list. I hit Add New, goes right in there. So now you can see that this changed. It says Adobe, and I've got Adobe now in my tier 1 watch list. I can hit View All, and here you go. Here's all the stocks in summary view, all the stocks that I've just sort of dumped into my tier 1 watch list. It's really, really quick and easy when you make your watch list, whatever you want to call it. If you want to call it watch list, if you want to call it favorites, whatever. If you make that the first list in your account, it becomes this really quick and easy dump bucket, sort of. So, let's say I like Adobe a little bit more, and I'm actually getting serious about it. What I can do now is hit Save As and move it down into my stocking list. I can hit Adobe, choose stocking, select Save, and now it's down into this stocking list, which is stuff that I'm more actively considering, stuff that I'm keeping a really close eye on. You can see it moved into that list. So anyways, my tip for you, create a watch list and modify the naming convention of your chart list and make sure that watch list is the first chart list in your account. That's going to make it really, really easy to just dump stuff in there as you're coming across it, save it for later. You can always come back to it, as opposed to having to, every time you want to save a chart that you stumble across, as opposed to having to go into that drop-down menu and select something, scroll through maybe a couple dozen chart lists that you have. So,
Grayson, could you explain how maybe you can just change the name of a current list you have to?
Sure, that's a great idea. So let's say I go down here. I'll scroll all the way to the bottom. I'll do my top charts. This is a random list from an old StockCharts project. So I'm going to hit my top charts, and I'm going to choose Edit, okay? The Edit view for that chart list. Now, all you have to do to change the name of this chart list, of an existing chart list, is click this. You'll notice that it changes here. You can actually type, and I'm going to say, this is my watch list, okay? And I'm going to use my 1-star naming convention here. I'm going to hit Save. And now, when I go back to my members dashboard, and I hit chart lists, you'll see that the first list here this is my watch list. So now I've updated the name of that, and I've made it using my 1-star system. I've made it the first list in my account. And when I go up here and I pull up Adobe, pull up some random chart, you'll notice that this is my watch list is now the first list in my my drop-down menu there, first list in the order. Now, you can also get to that edit view here if you're on the members dashboard. You click chart lists, you scroll down to your chart list. Under view list as, this is a drop-down menu, and you can select edit. So you can go right to that edit page. And again, you just click here. It says actually right there, chart list title, click name below to edit. You just click that, hit save, and you're good to go. That help?
Yeah, I think so. That was, because everybody's pretty excited about what you're showing, but they're concerned they can't change their name.
Yeah, hopefully that helps. All you got to do is go to the edit view for that chart list, anyone that you want to rename. If you want to add a new list, if you want to just create a chart list from scratch, you can scroll down here. You can also hit new right there on the members dashboard. If you hit new, it'll pop up with a box and you can just rename a new list. Again, another new watch list. There you go. And it's right there. You can start adding stuff to it. So anyways, I wanted to show that tip. I think it's a really, really quick and easy sort of stock charts hack. And I've found that it just makes my sort of analysis a lot faster. It makes my use of stock charts much more efficient, if you will.
Yes.
Hey, Grayson.
Yep.
Yeah, there was a question that had come in too about, if you're in a chart list and you want to add a bunch of industries at once, could you just kind of show them how you can click on that many?
Yeah,
Sure.
how do you add just a bunch?
Yeah, so this is a new list that I just created. When you first create a list, it's got this message here that says, welcome to your new chart list, another new watch list. So you have a couple different ways to add charts to this. You can do one, and if I wanted to add, Microsoft or something, and I can even add the name. So that's gonna be added to the list. If I want to do many, I can do Adobe and a bunch of different stocks here and just separate them with commas. You can see that I separated each of these with a comma. Okay, and that's going to add a bunch of different stocks to the list. Now you can also add from group. We've got these different predefined group options. You can add from all of these different predefined groups. You can do industry groups, US and Canadian industry groups. That's another quick way to add stuff. You can also upload from a CSV file. So that's another way. If you're maintaining a spreadsheet or something on your desktop, you can also upload from a CSV file. So anyways, that's how you can add stuff to a chart list. That's a good thing to note. Thanks, Tom.
Yep, no problem. Very cool.
Yeah. Yeah, Tom, you gonna create a watch list? You gonna create a tier 1 watch list?
Can't wait. I'm gonna set mine up exactly the way you have it set up, Grayson.
There you go. There you go.
I'll be giving you a call later.
I'm teaching you. It's important.
Yeah, absolutely. No, it is pretty cool though, because you have the opportunity. Everybody has an opportunity to set it up the way they want to set it up, and I think that tip about putting your whatever that your main chart list is that you want to be able to move things around the quickest. I think it's a good tip to have that as your number one chart list on the drop down menu, because then it's basically your default. So if you're if you like to stalk a lot of stocks and you're like, man, that one looks really good, I don't want to forget about it. Well, if you have your stalking stocks or your watch list or something as your very first chart list, you find that stock as you showed with Adobe. All you do is you just click on that one save button and boom, it's it's in your list.
Yeah,
so
it's fast.
Very
it's
quickly.
Fast. Like I said, this is an efficiency thing. It's kind of a stock charts hack. That's what we'll call it, but definitely a great way to sort of make your use of the site a little bit more efficient. So anyways, with that, I think I'm going to let you guys go. Thanks for having me here on Everything Stock Charts, and I'll see you guys again soon.
It's always great having everybody at Stock Charts come in here and give different perspectives.
Always fun.
Yeah, I really appreciate you coming in here and sharing your personal account. Now for a real tip, what stock would you buy?
Oh man. I don't know. That might be a violation of company policy or something. But here, I'll leave you with this. Take a look at TSS. Well, actually, I can pull it up here.
They reported earnings, didn't they?
They report tonight. So, Tom, I mean, you're not going to want to play this one, but Total System Services, I actually look at sort of relative strength here. I've got these 4 relative strength charts, which is the stock versus VTI, stock versus total market, its sector versus total market, its industry group versus its sector, and then the stock versus its industry group. I look at that. It gives me a really quick sort of relative strength picture. And you can see that all of these are pointing up, strong uptrending relative strength. It's outperforming everything. PPO is climbing. Trend is just incredible, trading above all of these different moving averages. Love the on balance volume here. Checking money flow up in the green. I mean, great. Strong scooter. Lots of good stuff happening here. So I'm watching this one closely. Yeah, like you said, Tom, they report after the bell today. So
do you own it? Do you own it?
I do actually own it. Yeah.
You have to tell everybody.
yeah, I do own it. So I'm violating here my bully rule by holding through earnings, but I'm got high hopes.
Feeling good.
Yeah.
I'm just gonna wish you luck.
All right. Thanks. I need it.
Appreciate you coming on, Grayson. Really good stuff.
Definitely. See you guys again soon.
Mm-hmm.
All right. There he goes. Grayson, with everything stock charts. Really cool. A lot of good information about chart lists. And, Aaron, you and I have talked about this before in terms of, what we feel is like the most important thing at stock charts. And I tell you, for me, chart list is right up there. I mean, I like to be able to scan against my chart list. So,
Right.
I'm not sure which one is more important, which one came first, chicken or the egg. I mean, I need that chart list, but I also scan. But definitely the combination of those two would be the most important to me. But I think it's really important to keep a chart list, and being organized is really important too. And that takes a little bit of time and effort, skill. But
Absolutely. And it's just one more reason to be an extra member so that you can have more than one chart list, because the more organized you are about your investments and your trading, I think the better off you're going to be.
Yep. All right. It is time now to move on to just a sector analysis. And I know you've got some stuff set up with the RRG. So why don't you take it away, Aaron?
Yes, I will do that. Oh, that's not the one I wanted, though. You guys are getting a quick peek, though, at our 10 and 10 requests. All righty. Okay. I did have this up. There we go. All right. So honestly, I wanted to just start quickly. We only have like a few minutes, so I'm not going to get too far into it. But go to Chart School, look up sector rotation analysis. It tells you about the business cycle. And really, this is a very important chart as well. So it tells you what you should expect in an expanding or contracting market, bull market, market bottoms, who's going to be doing the best. And that gives you a pretty good idea of your aggressive versus your defensive sectors and what you want to look for in terms of rotation. I decided to do a perf chart too today, instead, as well as the RRG. These are, it's a perf chart of just the sector ETFs. And I thought it was interesting because it does kind of give you an idea. If you notice on this end over here, that tends to be more of the defensive area here. And this is going to be more of your aggressive, although I would call financials, I'd put that over there too. In fact, I think I can do that maybe. No. So anyway, I just wanted to point out the, how these guys are doing. And clearly, utilities has been struggling. This is a 3-month perf chart, but you can bring it back out. And as you can see, all of these more defensive type sectors have been staying in the negative. So I'm going to start with the last 2 days and watch as I bring this out. You can see pretty much the majority of the time we're seeing these not doing that well in conjunction, when you compare it to the more aggressive sectors and how well they're doing. So at this point, I pulled up that 90-day about here, 100 days. And so we can see that obviously utilities is the underperforming more so than just about anybody by a lot. So if you're going into looking for investment ideas, this is not a sector I would necessarily be going to. And yes, when it's come back this far, you want to look for some opportunity, but this is that falling knife that we were talking about earlier. So here's the rotation graph currently. And as you can see, staples had started improving here, and that is considered, more of the defensive side, consumer staples. And it is starting to turn back down. The main thing is look at which ones are the strongest. And right now, a lot of these are in those aggressive sectors here. But we can see that weakening right now, technology and materials. I thought that was interesting to see technology moving in that southwest direction, which is the direction you do not want to see on a relative rotation graph. But I like to see these leading sectors. It looks like here's XLU right here. Look at that horrible travel. It's traveling in exactly the wrong way. And here you can see all I have to do is click on these and you can kind of get a good look at what actually has been happening. So as far as the sector rotation is concerned, I don't think we're seeing anything new here. We're seeing the same sectors pretty much in that leading category, the financials, energy, consumer discretionary. I mean, everybody in general is doing well. The ones that I would be concerned about here are technology and materials. They're starting to lag here. XLV, the healthcare, is starting to improve, and it's traveling in the correct direction, that northeast direction. So At this point, that's pretty much what I'm showing for the sector rotation. And I'm going to pass it back to you, Tom. I know you had some relative, oh gosh. Well, you were looking at some relative graphs.
Yeah, I'll grab the screen here and just show. It's just a really quick look at the way I look at the market anyway, is I want to see whether or not we're seeing strength in some of the key areas, aggressive areas, as the market makes its move to the upside. And, and knowing that we're going to see rotation from time to time. So let me go ahead and pull up a chart that I think will quickly illustrate this, or at least I hope it will. So here is the S&P 500 on the top. And actually, I'll even make this a little, let me, the height I'm going to bring just a little bit higher. Let's make this 1500, try and so everybody gets a little bit better view. Here's the S&P 500. You can see the S&P has been moving up since September. And then the next four charts that you see here below are relative charts. So this one is the technology, or the XLK, relative to the S&P 500. And then you go down to the XLI relative to the S&P 500. Same thing for the XLY, and then the XLF. And as you look from left to right over the last 4 months, I think for the most part, you can see that we're all heading in the right direction. Each of these are moving from left to right, moving higher, meaning that all of the aggressive groups are outperforming the S&P 500. So that's where the leadership is coming from. And that's what you want to see in a bull market. Now, you're going to look through periods. There's going to be periods where we get underperformance from these aggressive areas. And it's during those periods that I think you can find some really good opportunities for trading. The XLY is the one that, in my opinion, is the one that's on fire, really, and really leading this push going back to the beginning of November. This is a group that has been steadily outperforming the S&P 500. A lot of it has to do with retail, the improved retail space, but there's just a lot of different areas of consumer discretionary that are performing really well right now. And as a result, we are seeing a ton of outperformance in that area. So that's really all I wanted to point out, is that as the market goes higher, I like to look at this chart just to get a sense of whether or not we're seeing leadership from the four aggressive areas. And I would say, even though, if we look back over the last couple of months, you could say, well, XLK is down from where it was 2 months ago. Well, we're still quite a bit up from where we were 6 months ago. And if I pulled up a 10-year chart, you'd see that the XLK versus the S&P 500 has been going up fairly steadily for the last 9 years throughout this bull market. But it does take pauses. It's not going to outperform the S&P every single day or every week or even every month. You're going to have pockets of weakness. But generally speaking, when you get those pockets of weakness, you're going to be able to find some pretty nice reward to risk trading opportunities, in my opinion. We saw it with the XLI. And what this chart doesn't show you is that there was a negative divergence on the industrial chart back last year in the fourth quarter. And we saw relative underperformance after that occurred. We saw the exact same thing with the financials after they had a negative divergence. So you can anticipate some of this. But again, just looking at it from a big picture standpoint, I think that the charts here, these relative ratios, look very bullish. And I suspect we're going to continue to see higher prices with normal pullbacks along the way. Actually, we really haven't even had any normal pullbacks along the way, but I wouldn't be too concerned if we did see a little bit of weakness in the near term, just because we're so overbought. But I think the more intermediate to longer term picture, to me, still looks very bullish as we go forward.
Okay. All right. Well, with that, I think we probably want to get started with the 10 and 10.
Yes, we do.
And the very first symbol we're going to have for the 10 and 10 is going to be Realty Income Corp. But I'm going to steal the screen while you're getting ready there so I can show everybody that RRG.
Okay. I had the screen, but that's fine because I think this is pretty cool.
Yeah. So what I like to do is look at, let's see, I basically pull up all of your requests and go ahead and throw them in an RRG just to get a feel for. Obviously, this is kind of a mess, so I think this is much easier to look at. But interestingly, you guys are picking a lot of them that are in the lagging column. And I suspect it's because you're hoping that it's going to be moving up into that leading or getting toward the improving categories. So interesting, but I'm always going to pick these, the ones that are in the blue, because they're the ones that are obviously improving. And so I want to look at those for sure. And then I just pick up various others, try to get the ones that have that northeast travel direction for you all. But anyway, so our first one, go ahead, Realty Income Corp.
Okay. Well, it's in a space that's more defensive, so it's not been performing as well. I do like the fact that it is bouncing off of support. So I think probably the first thing, if I was annotating this, and as Grayson was showing you earlier, you can save it into a watch list, and then of course you can annotate them as well. But this is a stock that has pretty good support. You can see down around 52, 52 and a quarter. That's where we bounced off of. We've been moving back up to the upside, but now we are testing overhead resistance at the falling 20-day moving average. So I'm kind of a little skeptical here, and you put another level in here. This was a support level that was broken on heavy volume just about a week and a half ago, maybe 2 weeks ago, and we're coming up and testing that area as well. So I think in the short term, I'm a little bit cautious on O. If it can break above, say, 54.50 on a closing basis, I think that would be much better because, again, it takes out that 20-day moving average, and it also clears a short-term price resistance level.
All right. Next one in the financial space is QIWI.
All right, sounds like Kiwi.
Yeah.
All right, QIWI. This one actually has seemed to have turned the corner, and I love the big gap up and heavy volume. This, again, to me looks like a breakaway gap off of a downtrend, and I especially like the move after it came back down and tested the top of gap support. So I've said many times the way I like to trade these gaps, when you get the heavy volume gap up and you continue trading up throughout the day, instead of looking for a gap fill to the bottom, I use the top of gap support as my primary support level. And you can see about little over a week later, we did come down all the way back down to test the top of this gap, and then we've been going up since. MACD, well, actually PPO, looks very strong here. I think the volume trends look good. I expect we're going to continue to move higher. We're at a key resistance level. You can see the volume had picked up back in September. We struggled at about the 1850 level, and that's where we are right now. So we might see a little bit of a pause here, but I think the rising 20-day moving average underneath should provide some pretty nice support here.
Excellent. All right, the next one I have for you is XPH, pharmaceuticals spider.
Yeah, I really like this. And I think the pharmas are starting to look a lot better. We talked about this one when I did my 2018 market forecast. This is a group that can really power forward when it gets ahead of steam behind it, takes out some key resistance. So pharmas have been strengthening without a doubt. And I love the way that this is holding that rising 20-day moving average on pullbacks. So I think that this is a really good space. We lost it one day there and then bounced right back up above, had a very bullish engulfing candle. You can see a test there of the 20. We continued moving higher. We got close again about 3 days ago, and we continue to break out with a rising PPO. So I think the volume trends here look good. Multiple tops at about 44 over about 5 months, 4 or 5 month period. We finally cleared that. I think things look really good here.
All right. Let's see, the next one I have for you is INVA.
All right, INVA.
Another pharmaceuticals.
Innoviva. Yeah, big breakout. This is, again, sideways consolidation, making a very big breakout. Volumes picking up. So not much not to like here. I mean, I'm a pretty big fan of what's going on. Here was the top back in early October. You can see we hesitated as we got up here again just about a week and a half ago. Pulled back one more time, but notice that rising 20-day moving average is holding, and now we're getting the breakout. I think it's gone too far for me to jump in at this point because a normal pullback and test of price support would be at 1475. But at some point, if the stock were to pull back into that range, I think it would be a buy. I like the stock. I like the chart.
All righty. Let's see. Next one I have for you is going to be ROG.
All right, Rogers.
Mm-hmm.
Let's see here. Well, it's kind of hanging in right at the 20-day moving average, which is about where I would expect because we do have a fairly strong PPO. And when I say fairly strong, there's some who might look at this and say, well, we've got a lower lower PPO from where we were back in November. But keep in mind the PPO is based on the difference between the 12 period and 26 period EMAs. So when you're looking at PPOs that are 2 months apart, that's beyond the 12 and 26 period EMAs. So in other words, you're looking at data that comprises this PPO that's completely different than the data over here. I find it really difficult to look at this and call this a negative divergence. I think instead prices have been moving higher. PPO has turned higher. And so I think that the PPO here looks really good, meaning that when we get these pullbacks to rising 20-day moving average, that normally is time for me to consider buying. So I think the fact that it's sitting right here on that 20-day moving average is actually a pretty nice opportunity. And we've seen this time and time again during this uptrend, how this 20-period moving average is holding. So I expect Rogers to bounce from where it is currently.
All right. Let's see. Next one I have for you is ICHR.
All right, ICHR
Holdings.
All right, ICHR Holdings. Well, we're at resistance. I mean, I like what's going on. I love the volume coming in on this move. But if I was in it, I'd probably, being a short-term trader, I would take profits just because we're right up against a key resistance level. It doesn't mean we're not going through, and we could, but I would take my money and wait and let somebody else see if they can get it through. PPO, this is going to take me a while to get used to using the PPO instead of the PPO is rising, so it's telling us momentum is building. Price acceleration to the upside is pretty evident. But to the downside, we could have a normal 20-day test. And so I would take profits off of this huge move, and I would be waiting for one of two things, either a pullback to test that rising 20-day moving average or a breakout above, say, $35. I'd be willing to give up the next 75 cents of this trade. I'd want to see a high volume breakout, or take my money here and get back in cheaper on a 20-day test.
All right. Next one I have for you is Overstock. That was probably the leader on that RRG of all of them.
All right. OSTK.
Yep.
Yeah, it's been consolidating here a little bit over the past couple of months, which I think is a good thing. Got a little bit overbought. As you can see, the RSI had moved up into overbought territory. I think as long as this trend line continues in play. So I'm just going to connect the trend line from the prior highs. If we start back earlier in, I guess that's August, and connect these highs, or excuse me, connect these lows. And then I'm going to put in two key price areas. That was a prior high, which typically should hold as support. And you see we had a gap down here, but we came back up and basically held this level on the close. But I would even go down to this low here. I think we got a couple of key support levels here. The trend line comes in right in the middle of these two support levels. I think this one still looks very good. Your next breakout would be a close up above about $86 or $87, and that would require some additional volume to confirm that breakout.
Okay. The next one I have for you is, let's see, for our Canadian friends, shop.to, Shopify, the one that's on the TSX.
All right, shop.to, another big resistance level coming up. And I know sometimes when you get these stocks that are moving higher, you really don't want to take that profit when they get up near resistance. But you can see here, if the stock moved up, came back down, hit that rising 20, went back up, hit resistance, never made it through, fell all the way back down toward the bottom of this support range or support level, went back up, and you can see, look at that shooting star off of the move higher with an intraday high, very close, didn't quite get up to the resistance, but very close. And this is my argument for taking profits when you get close to resistance, because look at what happens here on this pullback to the downside, almost all the way back down to support. And now here we go again, back up to resistance. So are we going to get through? I don't know. I'd be taking my money and again watching to see if somebody else can, pop this thing above some pretty key resistance around 152. And I'd like to see some volume coming in on that move to the upside. In the meantime, you could always consider that rising 20-day as an opportunity to get back in.
All right. Let's see. Number 9, HAIN, and that's Hain Celestial Group. It's consumer staples.
All right. Hain. Yeah. I mean, it's doing okay. It's made a nice move, very heavy volume, sideways consolidating. I don't really like losing that support level, but we did get a little bit of volume come in yesterday, and we're starting to see a continuing move here, trying to push back up above the moving averages. I don't know what let's take a look at the longer term weekly chart because it looks like it might be some kind of a head and shoulder. Well, not really. It's in more of a longer term downtrend. See, when I step back and I look at a chart like this in a bull market, and I'm trying to outperform the S&P 500, I just don't like to go with a chart like this. If we got a big gap up and took out a major level and the volume was really strong, that might change the picture here. But for me, I don't think I would be interested until we get through 45. We're just in a downtrend and seems like we can never get back up above the prior reaction high, which is here back in the middle of 2017. So I just think we're sitting in the middle right now of doing not a whole lot of anything in a downtrend over the last couple of years. So I would, break out above 45, and I don't have to catch every single dollar of a move to the upside. I just want to see this thing starting to strengthen and starting to outperform. And to do that, first thing it's going to have to do is get through 45.
All right. Let's see. The last one I have for you is going to be, let's see, CCI.
All right, CCI. All right, well, that is the weekly look, which doesn't look too bad. Let's take a look at the daily.
I just got a PMO buy signal and oversold territory for it, so it would definitely be on my radar.
Yeah, I kind of like the move taking out trend line resistance. I'm just kind of taking a look at this one. I think if you just draw, from the tops here, looks like it's trying to clear that level right there. And the volume's been pretty strong on this move off the recent bottom. So I think it's got a pretty decent shot here. Unless it reverses later today, I'd be a little nervous if it reversed on me later today and left that tail up above the trend line, kind of like what we saw over here. But a pullback, back below the 50-day moving, or excuse me, the 20-day moving average would make me a little nervous. Otherwise, a push back up here to 113 is what I'd be looking for. So I think Crown Castle looks kind of interesting. 113 would be a sell for me, though, until I can see that breakout. That's a double top. And, maybe off of this uptrend, it's going to set up somehow and maybe an inverse head and shoulder pattern. But 113 is a big resistance level. So let's look for heavy volume to break out above 113 or potentially maybe see this pull back to the rising 20-day moving average.
Okay, and that completes the 10 and 10. And with that, there are symbols that we covered. I will have those in the Market Watchers Live chart list, which you can find the link to at the top of the Market Watchers Live blog. And then you can get all of those annotations that Tom just did. With that, I'm going to move into our final market update. And here is our candle glance. I'm going to go ahead and refresh it just to make sure we've got the latest. And interesting day. The Dow opened lower. It managed to get into that positive territory, but right now struggling to get back into positive territory after falling into the negative just before lunchtime. We can see the S&P, though, is staying on the positive side, as well as the NASDAQ, which are both up slightly. Russell 2000, really difficult morning. Down all the way to the 1600 level for Russell 2000, but has managed to bounce back, is now in the positive territory and sitting at about 1607 currently for the reading. TSX mostly unchanged at this point in time. We can see that Treasury yields are lower currently. UUP is also trading lower, did manage to make up for some losses early in the morning. We can see commodities are up, pulling back somewhat, likely because we're seeing USO. on a nice rally, pulling back somewhat. We've got gold, which opened lower today and has now formed a really nice looking flag. So we could be looking at higher prices for gold, if not by the end of the day, possibly tomorrow. The VIX is mostly unchanged, reading right about 11, and we can see that declines are leading advances currently. Take us to our market summary and get a feel for what's happening in all those sectors we were talking about with the sector rotation. And here we go, sector spiders. At this point, we're seeing utilities are leading currently, and laggards, consumer staples, materials. Those are sitting at the bottom. Consumer discretionary is also doing well as far as our spiders are concerned, up over 0.5%. U.S. industry indexes, hardware, biotechs, utilities all leading. And we can see telecoms, drugs, and transports are the laggards currently as far as the U.S. industry groups. International ETFs, China is leading up almost 1.5% now for FXI, the China ETF. And the laggard, big laggard, Brazil, is down 2.25% right now. Definitely the laggard among all of the international ETFs. Finally, I'm going to take us to our homepage, and I want to go over some of the big scooter movers currently. And we'll look at large cap. Top up, big mover, RMD, ResMed, big gap up right now. Not a surprise to see a 51-point change on the scooter value. We're also seeing travelers up with a gap, as well as BABA. We're getting a nice bounce on BABA after a pullback. And we can see we're now starting to test overhead resistance, but a nice almost 4% move today for BABA, a PMO that has now managed to turn up above the signal line and is not in what I would call overbought territory at all. So BABA looking pretty good, but this overhead resistance level could be an issue, but we'll have to watch and see. And with that, that concludes the final market update. Did you have any notes on that, Mr.
Yes,
Bolden?
I did. Just a couple of things. I know biotechs have been really strong. By the way, BABA was my setup for Monday.
Yes.
My blog, but I didn't pick that one.
Isn't that the way?
I am like batting 1,000 with not picking the right one each week. But anyway, BABA, yeah, definitely having a good day. That was an inverse head and shoulder, by the way. It looks like it's trying to execute, but it's going to need a little bit more move to the upside. But the volume coming in is certainly a bullish development as it moves higher and tries to make that breakout. Just a couple things on the biotechs. What I did is I actually went into the scooter reports, and I'll go back and just show you this real quick. So from the control center on the left-hand side, let me get back here. Okay. So under the charting tools, actually, no, under the reports and analysis tools, I'm going to get there. The scooter reports here, if you click on that, and what I did is I just went in to look at the mid cap. I could have looked at more large cap, mid cap, small cap. I just wanted to go in and look at the mid caps. And then I sorted. First of all, you can see a couple of the scooters here. The two highest are biotechs. There's another one, Neurocrine Biosciences, which also is pretty high. And Juno was the one that was just acquired recently by Celgene. But if you click on the industry group itself, actually, let me do it on the change first and then do it by the industry group. And we go down. I'm looking for the biotechs. I think it's going to be on page 2. So here is a group. Here's the listing of the biotechs. And this is the change in their scooter rank. And I find it kind of interesting sometimes to go in and look at it. So if I'm looking at the biotechs, we talked about this yesterday, they're making a big breakout over recent highs. They seem poised to make a big move up the challenge. I think it was the 2015 highs on the Dow Jones US Biotech Index. And so how do you drill down? How do you find maybe some individual stocks? Now, let me just say that if you start picking out individual biotechs, there's a lot of risk in doing that. This is not a group that all of them go up hand in hand or whatever. You do have to understand that there's a lot of specific stock risk when you start picking individual biotech companies, because they could come out with, some drug that failed to meet FDA requirements, whatever, and the stock could be down 30%. So understand what you're investing in. However, having said all that, if I look at the biotechs and I look at some of the ones that are starting to show some positive changes, let's look at ACAD, because this one looked to me like it's breaking a downtrend line. Here, it had been downtrending for quite some time. Look at the last two candles. Yesterday, volume, very heavy. Today, also very heavy. And it's got overhead resistance just above $31. It got up to $30.99 today. A breakout above that level, I think, would be very bullish, especially with the volume that's coming in today. A couple of others that I was looking at, I think Seattle Genetics, SGEN, was another one that looked to me like it was breaking out of a downtrend. You see this little channel. If you connect the highs, you connect the lows, but we are now clearly breaking out. Look at the volume picking up. So some of these mid-cap stocks, biotechs, that maybe weren't looking so good just a couple of days ago with this breakout in the index, some of these stocks are looking pretty interesting. So I just wanted to point out a couple of those stocks and how you can use some of the tools here at Stock Charts to try to drill down to find stocks maybe that aren't the ones that everybody's looking at, not the Amgen and the Celgene and the Gilead Sciences, but there are also some smaller mid-cap size biotechs that can be very interesting as well.
All right. I know that it's time now for agree or disagree. So I think we're going to have to let everybody know what the statement is for our agree or disagree.
Okay, well, the statement is the Dow Jones is going to hit 30,000 in 2018.
All right.
Do you agree or disagree? And I'll let you want to go first or you want to go last?
I will go last. I'd like the final word.
Final word. All right. Well, first of all,
if you guys want to vote, if you could just put agree or just put disagree. I don't need a whole lot of comments in the live chat room, but I'll tally your vote if you can just write in agree, or you can write in disagree.
Okay. Well, I'm a fairly short-term trader, so trying to make a prediction on where we're going to, I mean, I can tell you day to day what I think about the market, but trying to go out and say, we're going to hit 30,000 or not, it's not easy. But I just think the market's got a lot of bullish momentum. I'm seeing no signs, very few signs of any kind of top in play other than just needing a pullback because we're overbought. I mean, you can see here on the daily chart that we've been going straight up. Volume trends have been very strong. And if we move out even, to say a weekly chart, you can see that since back when really the election in November of 2016, we have been going straight up. We could step out even further. Let's go back to a monthly chart, and the bull market at this point, if you're just simply looking at the absolute returns on the Dow Jones, we've had a couple of periods where we've had maybe 3 or 4 months of weakness, but that typically has been followed by more strength, and we continue to go higher. Now, if we were seeing negative divergences on the weekly or monthly charts, or we were seeing leadership from defensive stocks, something like that, it would give me reason to pause and sit back and be a little bit more concerned about what's going on in the market. But we're not seeing any of that. And so the thing that I find most bullish about what's taking place, because let's face it, money flow is what drives the stock market higher or lower. Is money coming into the stock market or is it going out? And so when I look at a chart like this, one of the things that really makes me very bullish is looking at the 10-year Treasury yield. And this downtrend has ended. And on this monthly chart, you can see that we pulled back, held, and now we are breaking out above prior highs. And when we look back to what has taken place throughout this bull market, we've been having a declining 10-year Treasury yield. And so what that means is that money, while it's been going into the equity market, we've also been seeing money going into the bond market. So the gains in the S&P are going to be somewhat muted because you can only put $1 in one place. You can either put $1 in the stock market, $1 in the bond market, or some mixture, maybe 75 cents in the stock market and 25 cents in the bond market. So we haven't really had the luxury of rising Treasury yields. And when you look back at this bull market, I'm going to pull up the Dow again one more time. When you're looking at the Dow, we had a huge move in 2013 into 2014. and you could maybe even say the second half of 2012, that was a really big part of this rally. And if you take a look now at the 10-year Treasury yield, during that period, what was the 10-year Treasury yield doing? It was rising rapidly, meaning that not only is new money coming into the equities, but you've also got money rotating out of bonds. I think we're just making a breakout in the Treasury yield, meaning that I see a lot more money coming out of bonds heading into the stock market, along with new money coming into the stock market. No really any big warning signs on the horizon. I say we are going to hit 30,000 in 2018. I don't know where we're going to close, but I would be shocked if at some point in 2018 we don't see 30,000.
All right. So you would say that you agree with the statement we will hit 30,000.
I agree.
Okay. I'm a little bit at a disadvantage because I gave everybody my numbers earlier this year because I had to turn them into Timer Digest. They track us market timers, and they asked us for our predictions, pretty much a full-on prediction, where the Dow would end after the first quarter, and then after the second quarter, mid-year, where it would be, and then at the end of the year, what you think it will be at. So I will tell you that my first quarter, at the end of the first quarter, I had said 25.5. Well, obviously, that likely won't come to pass unless we see a pretty good size pullback. I don't think we're going to see a good size pullback at this point. So I feel like I almost need to add to my predictions what I think that is going to happen to the Dow. So let me give you the rest of my predictions. So at the end of the second quarter, I figured we'd be at 26.8. Well, we're really close to that already. And then by the end of the year, my guess, I'll say guess, was 28.9. So at first blush, I would say that I disagree. And just to make this, I think, a little more fun, I think I will continue on with the disagree. And I would say the main reason is we're not going to go straight up continually. This is the daily chart, but let me show you my weekly and my monthly chart for the Dow. All right. Well, clearly we've been in a parabolic move, and generally parabolics will fail miserably and very quickly. I don't think we're going to get really caught with a major price shock here, but we do. I'm sure we're going to pull back here any day now. Well, not any day, but we're due for a pullback. And I'm looking at my PMO on my weekly chart, and it is very healthy, and we are still heading very high. But it is in that overbought area at this point, very overbought as far as the PMO. Now, we know it can stretch out, and given a parabolic rally, not a surprise to see it move to these types of readings. But it does worry me when I see a PMO that overbought, but at the same time, it's pointing almost straight up. The monthly chart, though, is where I went to determine what levels that I would consider for the Dow. And I had already decided when I went in that we were going to have higher prices through the end of the year for the Dow, mainly because my monthly buy signal came in, and it's not overbought. And you can see over here, we've seen much higher PMO readings. So when I look at the monthly chart, we're not that overbought. And so I think that you could make a case for the Dow reaching 30,000 before the end of the year. But I still, I'm of the belief that we're still going to see some kind of a pullback. Obviously, I don't think we're going to end up with a pullback as deep as, I think we need. But I think that the pullback through the middle of the year, and if you remember, Tom McClellan was looking at the March-April timeframe for a pullback, and I think that's pretty right on. So I'm looking for a pullback at the end of the first quarter, and one of the reasons why I said at the end of the first quarter we'd be at 25.5. I think we might have to wait a little bit on that, but I do think we won't be that much higher by mid-year. I think we'll still, I had 26.8, like I said, for mid-year. And obviously, I think that's going to come in way low. But I'd be looking at, by mid-year, 27.8, because I believe we're going to see a pullback here. So I'm going to go with, we won't hit 30,000 by the end of the year. But I think there's plenty of evidence out there that would support either position. So for the record, so I'm a disagree, and you're an agree. I'm trying to tally up what is in the chat box. It started out very much to the agree. Everybody was pretty much on agree. We started to get a little bit more dissent near the end, but ultimately our live audience agreed with Tom that the Dow will hit 30,000 in 2018. I think the question is now, Tom, how soon that might happen.
I'll tell you, the developments just in January of this year, I think, have been pretty astounding. First of all, the Monday after Friday option expiration historically has been the worst day. And that's because the markets normally go up. You normally have in the money call premium. And so that Monday after options expiration, really even the next couple of days after options expiration, the market really struggles. And I watched in amazement yesterday we've had a melt up in the market really in January so far. And there has to be a ton of in the money call premium that was in the market at Friday's close. And the market just keeps going up anyway. And there's a couple things, when you look at what market makers can do. I always say, and I only say this kind of half jokingly, that they would, sell family members for $1 if they could. They just want to make money, and they'll do it at any cost. And so a lot of times when you get all this money, a lot of folks buying calls, market makers are on the other side of that. And you think, well, how can the market go up then? They would lose money. Well, if you think about the covered call strategy, stocks can keep going up. Everybody can keep buying options, call options. Market makers can be on the other side of those trades selling them, but then they can be buying stocks essentially to cover themselves in a covered call strategy as the market keeps running to the upside. I just find it amazing this month that after the huge rally we've had, we have not seen really much of a pullback at all, where they could have made money not only on buying stocks throughout January, but they also could have made money by reversing this market back to the downside, kind of what I call double dipping. I think market makers do that quite often, where they'll go along for the ride to the upside for a while, and then something swift happens, you get a big push to the downside, even if it's just for a couple of days, and they wipe out a lot of that call premium, and it just isn't happening. And to me, it's showing the strength that's in this rally right now. Somebody in the chat room, said melt up, and I completely agree. I think this market's in a melt up mode right now, and I don't want to miss it. It makes you a little nervous when it's so overbought and you're waiting for a pullback. But these types of moves don't come along very often. And when you think about the fundamentals, the fact that we're still at historically low interest rates, they're starting to move up, but all that's doing is moving more money from the bond market. I think 2018, honestly, I think it could be a really huge year to follow up on what we saw in 2017. I would not be surprised.
Yeah, I think you're right. I did get asked whether my projections were too low, the 25.5, 28.9 for the end of the year on the Dow. And yes, they are, given what's been happening this month. I'd probably add up to 1,000 on that. So end of year 29.9. I still am looking for 30,000, not looking for 30,000.
Well, then the question, it's not really at the end of the year. It's just at any point during the year if you think it's going to hit 30,000. So it could hit 30,000 in April.
I guess that's a good point.
You want to change it?
No, I'll just stick with disagree.
We're going to let you join the party. Okay. Yeah.
No, that's okay.
We won't know.
Actually, nobody's going to stick me on this later, I would hope. But I think it's more for interest being interesting.
Well, who would have thought that we'd been talking about this? I mean, literally last 5 months, the Dow's gone through 22,000, 23,000, 24, 25, 26,000. 5 months ago, or even the end of the year, I could see where maybe you weren't thinking 30,000, but it's pretty difficult not to think it the way everything's going. And I thought that announcement by JP Morgan today was just awesome. Willing to invest $20 billion over the next 5 years and paying their workers, all of their employees on average earnings hike of 10%. I think that's awesome. And all the hiring they're planning on doing, the new branches, And with rates moving to the upside, I mean, it doesn't surprise me that one of the leaders in the banking space coming out with something like this. But anyhow, we got the upcoming schedule going up on the screen there.
Yep. Wednesday, tomorrow, we have Scott Carney, the harmonic trader. I'm very curious to learn more about harmonic trading. So he will give us the rundown. And Friday, Tom, you've got a workshop, Trading with the PPO and Moving Averages. Should be a very interesting workshop.
Yeah, no doubt about it. And I tell you, I don't know how many times today I looked at the PPO and called it the MACD. Those who maybe are new to the show have to understand I've been working with the MACD for years and years and years, and just decided to make the change. I've been saying all along, PPO is a better indicator than the MACD. They are essentially look at the same data, but they present it differently. The PPO presents it in terms of percentage difference between the two moving averages that are used, and the MACD uses it, illustrates it or shows it in terms of the price difference. And so the MACD you really can't use to compare the strength, the momentum between a high price stock and a low price stock, because the high price stock has a huge advantage because of its share price. But the PPO kind of levels the playing field for all of them. Anyhow, it's going to be a good workshop. I'm looking forward to it. And that'll be on Friday. Yep. We want to thank everybody for joining us today. I really appreciate your support. Please remember to complete the survey as you exit. Lower right-hand part of your screen, how'd we do? It's a link to a very brief survey. We'd love to get your feedback and hear what you think, to hear what you think of Market Watchers Live. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everybody. We'll see you back here on Wednesday. Happy trading.